Hey there, this is Christian from Hertz, Tribeca Trade Group with your end of day recap for Tuesday, and we finally got a little bit of volatility into the market. So it was definitely not something that, sometimes typical sell-offs are, you kind of come into the day and there's a little bit of overseas drama and you come in and the market's already down quite a bit. That's not what we got today. The market started up, we were up about 20 basis points. Everything looked pretty good. Europe was up. Asia emerging markets were up last night, and we kind of came in and we were up 20 basis points. We saw some of the FANG stocks up this morning, and then the bottom fell out of the market. And, there really wasn't any, people always will try to look for reasons for this, and I don't really see one. I know that there's some talk about, the Republicans' health care plan may not may not get approved. I don't really buy into that. I think that we're just way overdue for a little bit of a pullback. We haven't gotten any volatility. The VIX has been around an 11. I just think that there's been people that have been quoting every day now for the last 2 months that the S&P hasn't gone down 1%. So we got it. And I am actually welcoming a little bit of volatility because this kind of stuff to me, where we move 10 basis points a day as we're grinding higher, is just not that. There's just not enough volatility to kind of really, trade intraday, other than just to kind of sit on your hands every day. So I'm actually quite pleased that there's some volatility in the market. It's not necessarily fun that day when you have some long positions because, you can't really predict this stuff. That when the pullback is going to happen, we kind of, have been frothy for the last couple months. One indicator that we talked about in last week's video and in my newsletter as well was the skew. The skew was abnormally high. A 145 reading, people start to jump up and down when the skew is 145. Again, what does the skew measure? It measures the volatility of out of the money options. And normally once they get to 145, there's about a 15% chance that we're going to have a two standard deviation move. So you have to take that with a grain of salt. I mean, we talked about this. I talked about this all weekend in the weekend video as well. But just to kind of reiterate, the chances of a big move are increased. So, if you we talked about hedging and how hedging was cheap on the weekend and Monday. So hopefully you did that because these things, they don't go up. They don't get extreme readings for no reason in particular. Usually there's a big move that usually comes from it. So that being said, that was the warning side that we did get in the market. And hopefully you took advantage and you hedged a little bit with that. So where are we now? Well, the S&P not down that much, 1.2%. Really, where where we got the first indication that something wasn't right today was when we saw small caps break down. Small caps ended down 2.7%. And, I have always alerts that go off, once we kind of break value for the day, as the S&P was up about 20 basis points, IWM broke value. And once I noticed that we were down 35 basis points, I actually put this out on Twitter today. I was like, this is not looking good. I was like, watch out. I was like, small caps have just moved from being up 20 basis points to down, 30, 40 basis points. And that was in the beginning of the day. And you could see we ended down 2.7% because we just really didn't have much support. The next area of support we ran through pretty quickly. So down 136. So we are looking at the previous, we're kind of focused in on this previous uptrend, where I thought we kind of had a nice stick save last week where we had a nice hammer bar and then we got back into value for the month. And then quickly, we turned on a dime. So we are at this dotted line, which is the previous breakout point. You could see for IWM and you could see for, I'm going to go over SPY in a minute, but IWM is also right on this 100-day moving average. So there's a little bit of support there. Do I think we're out of the woods yet completely? No, these things usually take a couple of days to flush out, especially when you have this high volume like this. I'm going to go over a little bit of just showing you where we saw volume. We talked about as well in the weekend newsletter, financials kind of showed the first area that something wasn't right in the marketplace, where they kind of broke a little bit about 2 weeks ago, when we had this big bearish engulfing bar, and then I said, hey, we could still kind of hang out here as long as we haven't broken into value. And then I talked about, I think it last. Sorry, I'm repeating myself, but I've talked about this in a couple of the newsletters, not newsletters, but the videos of the last couple days, where I said, hey, there's a sell signal. There's a couple sell signals here on this chart. So sure enough, we did get a warning that this was coming. So a big break here. So and this is typical of a decent sell-off day, where you see a lot of the high beta areas, a lot of the areas that got built up. Um, Very typical of a sell-off, where we see financials. KRE was down 5.4%. Steel names were down 5.6%. The KWEB, the Chinese Internet ETF, was down over 3%. Biotech, if I didn't mention that one, was down 4.9%. So these are just your high beta areas, and this is what gets hit first when you normally see a sell-off like this. So the other indication was the market breadth today, just really, really negative. I didn't think that we were going to come back towards the end of the day. I really didn't buy much today because I just saw that the market. The market breadth was just too negative. And then also, I know at around 11:30 this morning we got a little bit of a bounce, but I said watch the two moving averages that are on my charts. The reason why I have these on here is it really is a good takes a good temperature gauge of if there's going to be a reversal or not. And you could see that they didn't even touch. The price action did bounce around 11 o'clock, but the two moving average did not cross over. They didn't even get close to crossing over at that time, and the price action got rejected right at this 20 period exponential moving average, which is the blue line on here. So that's pretty textbook of, sometimes you get a little bit of a bounce, but a pretty quick fade. So I really didn't get sucked up into this little mini bounce. I said, I'll wait until these moving averages cross over, and I'd rather be late than early and wrong, which I say all the time. And I was not late. I didn't take anything to the long side really, and I just kind of watched this melt down. So again, I think this is well deserved, or overdue for a pullback. The VIX ended up still. I mean, the VIX is still under 13, which I don't even want to sell. One of my favorite trades is always to sell the VXX call spreads, but I don't think I want to do that quite yet. If we get up to, let's say, around a 15 or a 16 in the VXX or in the VIX, that would be a great place to do it. But you could see it's not even a blip here on the chart of the VIX. So, I'm actually hoping for maybe like a little bit, maybe another day of a swoosh through. And again, because if you go back to the S&P chart, this is this is very difficult to trade when we have these little tiny candlestick bodies where we're not moving at all. Today was a really nice day for me trading puts. Just to see that there was volatility. We caught a couple really nice trades in the room today. Hertz already, Avis was down quite a bit, and we saw Hertz, a big put buyer, come in, really sharp, aggressive. We also saw this in a couple trades. L Brands, a big put buyer in this one as well. LB kind of got hit really hard today, down 2.5%. And any of these areas of the market that are below the 200-day moving average, I think are full. It's complete green light for taking put trades. So anything in this retail sector where we're seeing put buying in, I think is fine to play. At this point, anything energy, I'm going to talk about oil in 2 seconds, but another trade that we saw today was, I keep wanting to say PXD, but it was, and I took this trade too, and I can't even remember what it was. PSX. This was a nice aggressive call buyer. 7,000 of the April 79 puts. So I made some nice money. I was down for the day. Just under $1,000 lost for the day because I did have a lot of longs going into today, but I took advantage. And some people they don't trade the put side at all, and you're doing yourself a disservice when you have days like this. I try to tell traders who are just reluctant to actually put on a couple put trades, they just don't want to take them. But would you rather trade this stuff, these little tiny bars, or would you rather trade something like this and have a double or a triple that day? So, don't be, I try to tell people keep an open mind. When there's volatility like this, take advantage of it. You just don't have that many days where you have that much volatility. So don't be blind to seeing puts and being, no, I'm not going to take any puts. I think that's absolutely ridiculous. And people will go quiet. You'll see people on Twitter, they only talk about calls. You got to be kidding me. Some of the best days I've had as a trader are playing the short side, playing the market turns. So, if you're following guys who are reluctant to take a put order, you're doing yourself a major disservice, because that's where a lot of money can be made. So what else do we see today? Up to this point, we really, this is when the market was up on the day. There just really wasn't that much buying going on. I didn't talk about volume, so I would just want to talk about how much volume traded in some of these financial ETFs. XLF traded 191 million shares today, which, the average 30-day volume is about 63. Take a look at KRE, traded 28 million shares today. That's almost 5 times average volume. So to me, this just tells me that I don't think we're done yet with moving to the downside. I think there's going to be a little bit more volatility. So I will be really surprised if we come right back. The other thing I just wanted to talk about, just another kind of problem area, is oil. Oil last week, which I thought was encouraging, we put in a nice hammer bar. But every day since then, except for this one day here, we haven't gotten above the trend line. So still in a downtrend, and every time we've tried to do it, we've gotten rejected. So again, this yellow line is the 5-period exponential moving average. Just a great way to kind of take a look at the trend. And every time we did this last week, we just couldn't get above it. We started the day again up about 1% in crude in the morning, and we just can't hold any bids in crude at all. So, it's still still below the 200-day moving average. And I think these energy plays, I don't think you really want to ignore some of the energy put trades that we're seeing, as XLE and XOP are both underneath the 200-day moving average. So I think, again, green light for shorting energy right now until it retakes the 200-day moving average. The other thing is high yield bonds, which I thought it was encouraging that we came back last week. We actually saw some inflows come back into high yield. It's right at the 200-day moving average. This may be a short to do. J&K actually broke the 200-day moving average. I'll wait. I'll give it a little bit, another day of maybe volatility. But I think high yield bonds might be a nice area to short right now if they fall below the 200-day moving average. And then the last thing I'll kind of leave on this video for the day is, don't be over anxious, which is what I told traders in the room today. Don't be over anxious to buy this dip. Every day we watch flow. It's what we do all day long, and you're going to see it. If you're doing what we're doing at Tribeca Trade Group and watching for option flow and watching big blocks hit the tape and cash, you're going to see the buying. You're going to see buyers come back into the market. Did we see that this afternoon? No, not so much. We saw a little bit of put selling in a couple different sectors, but we really didn't see any aggressive or major, aggressive call buying. So you're going to see that in front of you. You're going to see big orders go up in the FANG names. You're going to see big orders go up in various different sectors that are going to tell you buyers are back. So just kind of wait and realize when that's going to happen. Don't be the first one to go. You don't want to be the first one to go in and buy the dip. So take your time, watch for, the call buyers to return, the aggressive call buyers to return, because they certainly didn't do it this afternoon. So, so that's today's video. So again, just the message of today's video is, a 1% down day, not the end of the world. We want to see more volatility. It gives us more opportunities to trade when we're actually moving a little bit, when the market's moving, and not just like grinding, in a 10 basis point range all day long. So kind of welcome this volatility with, I welcome it with open arms, even though I lost a little bit of money today. So that's it for today, and I'll see you guys back in the trading room Wednesday morning. Thank you.